In recent years, the retail industry has faced significant uncertainty due to the health crisis and rising inflation. To cut costs, businesses nationwide have analyzed expenses and announced the closure of several brick-and-mortar stores throughout the U.S. This trend has impacted well-known retailers such as Bed Bath & Beyond, CVS, and Best Buy, all of whom have closed locations within the past year. Even dollar store businesses, which have typically thrived during difficult economic times, are now preparing to close stores. In this video, we will explore the reasons behind the closure of stores from major brands like Dollar General and Family Dollar. According to the Bureau of Labor Statistics, the Consumer Price Index rose 9.1% in June, the highest inflation rate in the U.S. since record-keeping began in 1979. Although the Consumer Price Index, CPI, for September has decreased to 8.2%, it still remains very high. Despite the rising prices that have led to an overall decline in retail sales, dollar store chains have seen significant growth in recent years. According to a New York Times article, Dollar General and Dollar Tree, which owns Family Dollar, are two of the top U.S. businesses that have experienced increased sales and earnings in their most recent fiscal year. As a result of price increases, consumers have reportedly been turning to bargain stores, and both businesses have seen an increase in customers with higher incomes. Joseph Feldman, a senior analyst at Telsey Advisory Group, explains that the consumer is trying to make ends meet, and when you have limited funds in your wallet, dollar stores provide the ability to do so. Despite some positive surprises, the collapse of several dollar stores seems to be imminent. Dollar General and Family Dollar have closed stores throughout the United States. According to an October 18th report from WRTV, an ABC affiliate in Indianapolis, and a November 2nd report from the Norwalk Reflector, the Family Dollar store in Norwalk, Ohio has closed. The Family Dollar in Little Chute, Wisconsin is also planning to close, as reported by the Kana Community News on November 15th. Last week, Donnie Anderson, the manager of the Kalkona store, announced the news of the Family Dollar store's closing in a Facebook post for the KOA community group. According to the sign, December 17th was the final day of business for this Family Dollar store. Regrettably, the Family Dollar business in Little Chute will be shutting down, as noted by Anderson in a message to the community. He expressed gratitude for their loyalty and support over the years, and mentioned that another Family Dollar or Dollar Tree store in the Fox Valley would be happy to assist them. The closure was prompted by rising rents, and despite the company's efforts to relocate the store by exploring the region for a new site, the lease had already expired earlier in the year. Other stores have also been closing over the summer, including two Salvation Army thrift stores, one in Manitoba, Canada, in June, and the other in Duluth, Minnesota, on July 1st. Additionally, the popular discount grocery chain Lidl closed two of its stores in the U.S. in the same month. The reasons behind these store closures are being communicated openly to customers, even though such decisions are never easy. Nordstrom Incorporated, the parent company of Nordstrom Rack, released a statement explaining that the move was necessary to diversify their business holdings. They strive to approach each market comprehensively, utilizing their physical and digital assets to provide customers with an increased product selection, faster delivery, and unparalleled convenience. As reported by the Minneapolis-St. Paul Business Journal, Nordstrom believes that it can best serve customers in the Minneapolis market by focusing on nearby Nordstrom and Nordstrom Rack locations, as well as online. Meanwhile, other big-name brands like Sears Hometown have already been downsizing their operations. As of 2019, there were still 750 Sears Hometown locations throughout the United States. However, according to CNN, the most recent round of closures has resulted in almost half of the chain's remaining retail base being shut down. Now, the focus has shifted to other well-known brands. Financial writer Stacey Caprio predicts that by 2022, businesses such as Gap may have gone out of business due to their reliance on customer spending in physical stores, which has decreased significantly in recent years because of widespread implementation of anti-theft and anti-hoarding regulations. To stay in business for the long term, companies will need to adopt innovative strategies and prioritize online operations over brick-and-mortar stores. Unfortunately, one of the negative consequences of retailers' decision to exit their remaining physical stores is that lockdowns and stay-at-home orders have had a devastating effect on the retail industry. Some experts argue that JCPenney, another legacy brand that may be on the verge of collapse, was ultimately doomed by the pandemic. The principal at C Street Creative noted that the company now has only about 600 remaining physical stores and a shrinking customer base. JCPenney has already gone through a tumultuous period, and now some of its stores are closing. In addition, one of the most popular retailers of home furnishings, Home Goods, announced that it will be closing some of its stores. On December 16th, the company announced that its store in Ashburn, Virginia, will be closing permanently on December 6th. The 25,000-square-foot building located in Ashbrook Commons, where the store has been operating for the past few years, is now available for lease. According to local media reports, office supply stores are also struggling. CEO Jesse Harrison of the Employee Justice Legal Team notes that the challenge for office supply stores is that customers do not necessarily need to see an item in person to purchase it. They can easily find and purchase the exact stapler they need from online retailers without leaving their homes. Harrison adds that people are already familiar with the appearance of products such as paper, so there is less need to see them in person. As a result, Office Depot's stock has been in decline since December 2019. According to Harrison, competitors like Staples and Office Depot are also at risk of going out of business in the near future. In 2015 alone, 198 locations of these two brands closed across the United States, bringing the total number of defunct locations to over 1,100. Data compiled by UBS indicates that tens of thousands of businesses have shut down during the past 5 years, and an additional 80,000 are expected to follow suit by the year 2026. When a facility closes, it can result in dozens, hundreds, or even thousands of people losing their jobs. All of these well-known brands have fallen victim to the same issue: a sluggish economy that could not keep up with the expansion needs of their businesses. As a result, shoppers are feeling the impact of the highest prices in decades, combined with earnings that simply cannot keep up with inflation. We appreciate the time you have taken to watch this video, and we look forward to reading your feedback and ideas in the comments section below.